Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 3rd of February. So the spread of the coronavirus has now really started to have an impact on the financial markets, and we're seeing quite a bit of volatility and quite a bit of concern coming into the markets in the latter half of last week and over the weekend over the impact of growth this virus may well sort of have in 2020. On top of that, we've also had Brexit that has now taken place in the UK, and later on in the week we've got crucial votes on the Trump inquiry, impeachment inquiry as well. So quite a bit going on there to keep the markets on their toes. So let's have a look at some of the markets here that we're keeping a close eye on in the trading room at the start of this week. So if we come and take a look at the Dow Futures contract here, first of all, it's our favorite instrument here for trading US equity markets. If we come and have a look at the weekly, this market's sort of really coming into, I think, some sort of key sort of decision areas on a number of different sort of time frames. We can see on the weekly chart that the market sort of pulled back into this sort of just above this sort of 28,000 level. I think around 28,000 sort of 100, there's a bit of structure around there, which you can clearly see on the weekly chart here. If the market gets underneath that area, then we're breaking the lows, the last low of this trend. So it's back into the sweet spot here. You know, if it does, a good place here for the market to find support and for the next leg to continue. But of course, if we see continued weakness, well, then we could see possibly a much sort of deeper retracement on this market. Now, if we come down to the daily time frame, we can see our sort of 28 sort of 100 sort of zone here, where the market sort of found key support and resistance before. Remember, this was an area on the weekly chart which acts as that sort of geometry, but on the daily time frame we're now sort of starting to see this looking rather weak. Now again, continued break of this sort of 28 100, well, kind of possibly next sort of structure point where we've got anything really sort of brings it down into the sort of 27.5, and possibly even down to that sort of 27,000 level. So there's significant potential sort of weakness to the short side, I think, if this sort of zone gets sort of taken out. Now, if we come down to the sort of 4-hour time frame, we can start to see that there is, although we're in sort of short trends on these sort of lower time frames, you can also see that there's significant sort of resistance above price and significant sort of structure here. So the markets, if I just sort of zoom out of this, you know, we've got some significant resistance here where the market's just pulled back to. We started to see that sort of weakening here off this sort of 28 sort of 400, 28 sort of 430 area, and the market's just starting to sort of weaken off here. So the market's in between two sort of key decision point areas, I think. If we see these zones here, these levels get taken out to the long side, then we could see a much deeper retracement to the long side, a bit of a move to the long side up to fill some of these trading windows. If the market takes out this sort of lower range around that 28 100, then I think we could start to see some more significant selling as positions unwind in some of these equity markets. So we're keeping a close eye on this sort of rather sort of narrow or relatively narrow sort of range here, and looking for sort of positioning here for the next sort of major leg of this market. Now, if we come and have a look at a couple of currency markets, a couple here are starting to look sort of quite interesting. We've seen quite a weakness in the sort of US dollar overall, but we've also seen significant weakness in the Singapore dollar. And this market, as you can see here, the dollar against the Singapore dollar has been in a very strong move here for quite some time now. We've got very good geometry, very good structure here on these sort of mid-time frames. And this is sort of one of the markets, one of the Forex markets, which has sort of had some rather reasonable sort of trend structure for a while now. So again, looking for continued opportunities on this market, specifically to take advantage of the weakness in the Singapore dollar. So again, at the moment, if we come and have a look at this on the lower time frames, you can see how the markets on these sort of lower time frames has sort of not necessarily been a wonderful trend, but we've sort of moved up, gone sideways, moved up, gone sideways, moved up. At the moment, the market's just sort of treading sort of sideways at the moment, moving back into these sort of moving averages, back into sort of pivot points. And again, looking for evidence here of continued strength in this sort of market. We've got each time the market sort of consolidated sideways, it happens to have consolidated along a pivot point, and you can see that each time it's done it, you know, it's sort of found these sort of pivot points as an area of previous support in the sort of sideways structure here, and we've got a same pattern arising here in the 60-minute chart at the moment. Now, one of the other markets, one of the other Forex markets that we spoke about last week was the Kiwi against the CAD. Again, if we just take a quick review of the analysis, what we were looking for here was a sell-off off this, or weakening off this level on the monthly chart, and for a continuation of weakness going forward. Now, you can see where the market's sort of closed January. It's sort of moved down. We're now at the beginning of February, just around the low of the previous month. Now, that's quite a bearish candle. It's also back into that moving average zone. It's also selling off a significant resistance level. So a break underneath this level, a break underneath last month's candle, I think could start to see some more significant weakness coming into the Kiwi against the CAD here. On the weekly chart, we can see where the market is at the moment, which sort of pulled right the way back here. But I think you can see a little bit more sort of structure when we start to come down to some of the lower time frames. So this is the daily time frame, and last week we were looking for this move from the level up here where this market had been consolidating down to the current level. So that trading window played out last week. We've now got this sort of consolidating now for the past sort of couple of trading sessions around the sort of current sort of decision point, and we've got another decision point underneath the market around 85,000. So that big round number, also a structure level that's seen significant key support and resistance again. So again, we're kind of looking for, I wouldn't be at all surprised if we get a bit of consolidation here, and then looking for a break and continuation of this trend to the short side. Remember that a break underneath these levels is also going to be a break underneath that monthly candle as well, and we could start to look for well, possibly a much deeper move as that monthly chart plays out. So there's a few markets there that we're keeping a close eye on for trading opportunities in the trading room. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.